Now, if we look at the market, there's been a sustained rally, a bull run on the market. It's seeing coming through for the 13th consecutive day, really on the back of those positive results. When was the last time we saw such moves on the market?
Yes, we've been seeing consecutive rally in the market. So last time we saw these levels of 33.90 were last year in November. Majorly it's because of the positive earnings, better than expected earnings, good dividend releases by most of these counters. And so investors are coming in to take up dividends because capital gains are not sure at this point.
Looking at some of the results out today, we had Equity Bank. The company reported a 42% rise in its pre-tax profit for 2011 to 12.83 billion shillings. Really healthy results are from the bank. Were the results what you had expected?
Equity Bank performed a lot better than what we had expected, majorly because they were able to push a lot more loans. The loan book grew faster than we had anticipated. And Equity Bank has focused a lot on the SME segment, and it lends along the value chain. So it's able to lend at high interest rates and get deposits at low interest rates. So if you look at the net interest income, it was also up very strong. That's what lifted their earnings, and costs were also managed at a sustainable level. And management has indicated that they intend to keep costs low, as well as lend more and move into more regions.
Looking at Equity Bank, the bank's on the regional expansion, the bank's regional strategy plan is quite aggressive, but Kenyan banks are faced with high interest rates as well as the high inflation environment. What's likely to play out for Equity Bank going forward?
For Equity Bank, what their advantage is that they have a large customer base, and most of this is mainly retail clients. So they're able to get cheap deposits from their retail clients and still lend them out at a high interest rate. So their net interest margin is not, we're not going to see a significant squeeze. But on a regional front, Equity Bank intends to open branches and set its business in Rwanda. So we expect this to obviously have a positive effect, and also they plan to beef up the branches in Tanzania. But along with this, they plan to leverage off agency banking. They have the largest agency network in Kenya as per now, and they intend to replicate this throughout their regions, just so that they don't have to have the costs of brick and mortar expansion.
Looking at another company that was out with, another bank that was out with results was Cooperative Bank. The pre-tax profit rose to 10% to 6.3 billion shillings after its loan book expanded. The company did not declare a dividend this time, but it did declare a dividend of about the bank did declare a dividend of about 40 shillings, really unchanged from 2010. On the face of it, the 10% growth in that pre-tax profit seems minimal. Was this the forecast for the results?
No, our forecasts were much stronger for Cooperative Bank. They didn't perform as well as their other counterparts, other large caps, for example, KCB and Equity Bank. They only did 10%. And this was majorly because that their expenses increased. They had retrenched a couple of staff last year, so their staff costs really grew. Cost-to-income ratio was up to about 62% compared to 58% last year. But management has indicated that they intend to have a new IT system, which they will leverage on to create more efficiency and to reduce the costs. So for next year, I think we expect to see better, this year, rather, we expect to see better growth from Coop Bank, mainly because of efficiency from the new system.
Now, as announced earlier, CFC Stanbic Bank is exploring new opportunities in the market and is looking to expand into South Sudan in the second half of the year, and also plans to carry out a rights issue in 2012. Now, Managing Director Greg Breckenridge had this to say.
We've had a long association with South Sudan as a fly-in banker to South Sudan out of Kenya. But we're looking to establish an operating, fully fledged bank in South Sudan. We want to be open in the second half of the year. It's, obviously subject to regulatory approvals, and there are 3 regulators involved. So, that's a process. We can't predict how quick that would be. But in our own internal planning, we are aiming to be open to the public in the second half of 2012.
Now, Brenda, coming back to the results out, we had just had the CFC Stanbic out there just now. Now, that company did not issue a dividend this time and did give a dividend in the previous results session of about 2 shillings and 18 cents. What is this likely to do to the stock going forward?
With no dividends and with the cash call coming in the second half, this is going to lead to a pullback in the price. We'll definitely see a depression in the price of CFC Stanbic, and we already saw that during the trading session of today. So I think going forward and even getting closer to the rights issue, we expect to see the price pull back a bit. And even when you look at CFC Stanbic results, their loan book to customers and their deposits from customers other than banks didn't grow significantly. They grew just below 10%. So this was also not very impressive. A lot of the growth in loan book and customer deposits was from other banks. They played very heavily in the interbank market. So this didn't sit well either with investors.
Now, we've had a lot of results out from a number of these banks. What are you playing? Which stocks do you prefer within the sector?
Right now, it's a dividend play. I prefer stocks that are giving high dividend as opposed to sectors. Stocks like BAT, KCB, high dividend yield stocks, that's what we're looking at. But also the banking sector still remains a good sector to invest in because for a long time it has outperformed GDP growth. So our topics in the banking sector would be KCB, Steel Equity Bank, Housing Finance Bank.